Ladies and gentlemen, there are a few components of scanner that probably many of you have not been exposed to. And so pay attention. Now, to be profitable, you don't need to know everything and you don't need to be struggling on everything. So you just need to know basic things and obey them as simple as possible. They are very, very important. All right. So I'm going to show you what are those things what are those things that require your attention to pay much attention to? Uh, and I call the major component of the scanner, and then what you need to be working with. Quickly, I'm going to take you around. Yes, let's go here. Okay, so let's go. Number one, key levels. Now, key levels, we see this the horizontal support and resistance marked with red and green colors, right? Are zones for entry and exit models, especially on a structure higher structure time frame, such as daily, right? Hourly, 4 hours, and 1 hour. The key levels assist traders to spot potential turning point, thereby fixing their take profit and stop loss appropriately. So let me just look at the chart now. Now let's go to daily time frame. All right. So look at it from here to here to here. Though when the market has not gotten here, you probably wouldn't see those major support resistance. So if you go around the market, you're going to find those points. If you look at gold, this is the major support. And when market was doing all what it was doing, somebody may not really pay attention. But when gold came back, what do you see? You see a bounce up and all of that. It's not showing a potential resistance, but not strong because it has not been tested severally. That's what it's showing you there. All right. Now, look at this. This was a resistance that was struggling over and over before it was broken. And then that's why you see that area is very important. Now, this one to have a support here is just a potential resistance up there. Okay, look at Euro USD, for instance. So there's a resistance up there. This is a major support down here, right? Now, this is a support that had turned to resistance. So, but the market is currently in that place. That's why you mark it this color. When it is away from here, above here, it will turn this one to green. If it's below here, below this region, it will turn it to red, meaning that this is a resistance. All right. So if we look at it, so I'm just explaining about the key levels. So I'm not going further for other things. Now look at it, the same thing on GBP USD. That's the same thing you have. All right. You have the same thing. Okay, I've done this. Now look at Bitcoin. So look at Bitcoin. From here to here is a zone. And there are things you are still going to learn about that. So from here to here is a zone. So that means we have a very serious resistance above here. Look at them up, 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 up here. And then we have one of the major support. That means if this one is broken, oh la la, that's going to be very crazy. Do you get that? So that's for you to know just key levels. What are they used for? And then you pay attention to them and all of that. It doesn't matter what currency, it doesn't matter what instrument and all of that. So this one is hanging in between confused stage, as it were. So if you enter such trade, may not deliver for you very well. So that is the essence. So this one is too obviously still bearish. Okay. So taking this type of trade now is a very big problem. So you know the trade to actually pay more attention and what to avoid. So you can see when the market was here, you probably looking for more buy for this because you are actually at a defined state. Are you following, please? Pay attention. They are very important. All right. So look at this. Can you see that? So look at this one, AUDJPY. See, continuously, the market still keep marking up as much as possible. I'm just showing you the key levels, right? So the key levels work in all time frame. So, but you would know when is more useful for you and all of that. So, which are more higher time frame, like I said, on daily time frame or 4 hour time frame or 1 hour time frame. Look at this now. These markets are both here, CAD JPY. Now it has given you sell, but even when you sell this market, may not travel well for you because why? This is a key level here that the market will come back to. So you actually expect the market to come and retest this. Once it retest, can bounce and continue the journey. Do you understand? So the key levels are very important for you because it just simplify your trade for you, right? it just simplify your trade for you. Look at this one that we expect to go, so it's still rolling over and again, go to the trade down here and all of that. Okay, so I remember when I was explaining that yesterday, right, somewhere. Now, so this is, you see now, it's a key level, and now this is like minor resistance, and so you expect that this market should actually return down, but I wouldn't too much give myself stress, except I'm going to scalp on lower time frame on this type of trade. You want a trade with clear direction, clear vision, telling you this is what I want to do. Do you get that? So I'm just showing you all of these things so that you can understand. So these are daily time frame. All right. Right. So look at it. This is on daily time frame. So if you go to now our 4 hour time frame, for instance, so let's go there, look at 4 hour time frame. You will now reduce, that level. Do you get it? It will reduce that level. So if you look at it now on 4 hour time frame, go say, okay, good, push back, and then probably to continue moving up and all of that. So that is one of the things you must pay attention. You can see that Euro USD is bearish, all right, it's extremely bearish because there is nothing that's supporting it. Yes, it bounced here, but I will explain to you over time. So key levels are very, very important. So you pay attention to them to understand. So look at this key level. So this now got a bounce here. Will you not still say, why not? But on 4 hours, at the end of the day, what could happen here? So I'm not going to explain things that are peculiar to 4 hours and 1 hour time frame. So I'm taking my time to just tell you about the key levels. Okay, so please pay attention. It's very, very important for you to understand how all of these things work so that you don't just overwork yourself in trading. Okay, does that make sense? Good. Now, so if that is the case, we have achieved this to understand what key level is. You can read up more thereafter. Next is called market structure. That's what we call it swing point levels, marked with high and low. Right? They help in identifying structural arrangement and movement of the market towards a given direction, which are also useful for potential entry points. So let's quickly go. And so these are more or less with, so work, so let me say work more with your 4 hours and 1 hour time frame. Okay, let's say 4 hours to, okay, to 1 hour time frame. Okay. So now, so I want to get the structure. So if I go on daily, I'll check the key level, I'll check other things I want to check and all of that. So I want to go to 4 hours. Now, ordinarily, not all the tools are revealed to you, right? Understand that not all the tools are actually revealed to you. So if you don't understand it, you misunderstood it, okay? So let's go quickly. Okay, so not all the tools that were revealed to you. Now, I'm in 4 hours now, so I don't need to go on daily for that, okay? Now, of course, if you are a swing trader, so opposition trader, you can go on. But as a day trader, intraday trader, even swing trader, these 4 hours is okay for you. So you're gonna read about my time sequence, a document I'll prepare. Now let's look at it. If you go to your scanner, let me show you something. If you go to your scanner, you will see that there are other points that was not ticked in your scanner. It's called show PV point. I trained with PV point too, explaining what PV point is all about. So shows PV point. Now, PV point is just like the swing region of a market. So show PV point, you click it. Forget about this support and resistance broken. Don't bother about that. Now, show PV point, and you can show your MA1. Okay, MA1, or if you want the two. But I don't like my chart to be too dirty. I like my clean chart. Very, very important. So you put it there now. So click OK. So you see that? Select. So go to your settings because I actually double click on my own. So you go to your settings like this and click on your settings. And then it come up this way. So what do I say you should do? Go to view point, check it, let it reflect, and then enable. So like this was like this there. Okay. So you click it to enable the 50 moving average. So I don't put 200. If you put 200, well, it's good, but so just leave only 50, okay? Because of the type of trading you are doing. So put 50 disable 200. So leave 50 to be there, then click OK. Fantastic. Now, you are not, listen, you are not using all those people who trade with moving average and all that. That's not our indicator, okay? It's just a supporting tool. So you are not trading with the indicator of moving average and all of that, no. Now, if you look at your market, see what has happened. So when this market was crazily coming down here, on your 4 hours, if you want to get more standard signal that will travel longer, use 4 hours, okay? Very simple. If you look at where this market was here, just go back in. Can you see 4 hours? Look at the resistance on these 4 hours. Then the market traveled, it gave a signal, and I'm still going to explain about that. So what I want to show you is that structure. Now, what did this market do? The market has traveled down and all of that. So it has created a structure. Now, let's take our signal. Yes, let's take our sniper calls so that you can see that structure properly. What do you see here? Look at this here, L, all right? So we that do smart money concept, we're going to get a structure before here, but this is typical, okay? So some of us who are going to get a structure here, perhaps will have gotten a structure maybe somewhere here and all of those things. So, but look at this clarity of purpose. It tells you this is low and this is high. So it has simplified. So this kind of is multi-purpose. This is what? A low and a high. That is swing low and swing high. So ordinarily, if I'm trading, so swing low and swing high. So ordinarily, if I'm trading, what I do on 4 hours, that means I will have used Fibonacci retracement. Remember, you are a student and you learn continuously. So for me to buy this, if I miss when it come up here, that's the essence of your scanner. The PBX sniper call will have given you an entry here. I have some persons who want to give them confirm, they just enter and put their stop loss below here. They don't care, right? So now I was going to take this to this point, assuming I do not even have on my scanner. Now, so if I'm not careful, I will have missed this trade. Do you know why I will have missed this trade? I'll miss this trade in the sense that the market did not come to a discount. And it is always said that, okay, any market you want to enter, right? Any market you want to enter, you should enter it at what? At a discount price. Okay? You should enter it at a discount price. Just a moment. I needed to do something. Okay? Five, 1, 6, 7. All right. 5, 1, 7. Okay, so we're arriving somewhere, ladies and gentlemen. We're arriving somewhere very quickly. So, the second layer I'm trying to explain to you is the structure. So, have you seen the way and manner? So, I couldn't get this trade here. And I've told you that if I'm marking my own structure, I will have seen a shift earlier than this. But nevertheless, it has given you this. But look at it. When I say with the support of moving average, this will have told you that, okay, the market has actually changed because now you have this structure. So break over here a high, then this is a low. So with this low, you're already above, all right? So now you are already above 50 moving average. So that shows that you are bullish, right? Now, so that market continued to move. Now it broke a structure. So all you need to wait for is the pullback of the structure. Now, what happened? Something remarkable happened when the structure got broken and market reacted. What do you have? You have this. So there was a resistance, a region that had been tested up and down and then form a block. So since it's a block, then you expect the market to retest it. So these are reasons sometimes when the market break, but this one actually formed what we called an engineer liquidity, because this is the swing low now and this is a swing high. So ordinarily, if you are going to take this trade, you are using Fibonacci retracement to locate the swing low and the swing high. Can you see? Now you see that the market, right? The market did not return here. Something has happened. This is what we call confluence. So it has actually complete a movement within this support region. So that's why it didn't come back here. So these are reasons sometimes you missed out on some trade when you use your fib level. So because the key level have held the trade, you have held that position, and then you find an entry. So you're buying already, and then so they retested, you're buying. So because this movement was not complete. So you are not in a haste. So look at it. High, then it broke it. Now move up, it never created a high. This is now significant high, and then create a turning point, and then come down to this point, and this is a very good entry, and then the stop loss is going to be below this previous swing low. Now the market retested is not a problem because you have your stop loss below the swing low, and then the market move up and broke a structure again. Can you see that? Now broke a structure again. It's saying that this is the main this thing, that this is a liquidity. That's what it's trying to explain to you. Now, if you take your Fibonacci retracement, perhaps take it from this swing low to this swing high. So this one now respect, because you know why? There's an alignment of the support level and the market region, all right? That it came here and even tested this. And that is a very powerful, again, somebody who just enter at the because already at the fib level and all of that. So I'm not explaining anything further than the structure. So we have another break here. So this is a high and this is a low. Now, this high is not confirmed, right? You know why? Because this low need to actually return. Once you take out this, it become a high that is higher than this in a low. So what are we going to have now? Are we going to have this market bounce back? Well, potentially, that's what it's looking like, because already, so that means I should be preparing myself, looking for a buy opportunity. So are you seeing it now? That's about the structure. I've just basically explained to you. So which is a swing point level marked with low and high and all of that. The next thing is called trend, up and down journey. The market structure identified as uptrend and downtrend. The EMA 50 and 200 EMAs are great support to help beginners or busy schedule traders to spot those regions. So you can see that, having seen that, okay, market has crossed above 50 moving average in a in a shorter, no, this is a shorter trend. A higher trend, you probably want to use 200. So 50 is okay, and then you can say, okay, this is an uptrend now. So when the market come down here, another and struggling, you are buying. You are buying. So you can imagine when you are buying and you never shake, continue, continue, continue. Then you have done about 400 and something pips, while others are in and out. And if you are the type that know what you are doing, you can buy and sell, because you have tools that told you, okay, this is a high. That means at this high, the market should be pulling back. All right. And so that's one of the things. So you look at the trend. So look at let's look at 50 now. So this is still a downtrend. Can you see that? A high, maybe probably like an equal high, a low, right? Then a low. Now this was not up to, so we have a low. Now up to now, this one took out this, but we couldn't register 1, 2, 3, register the high and all of that. But of course, just know that this cannot show you a perfect kind of things. And so you have to understand what we're doing per time. So it doesn't matter which market, if it's crypto, if it's Forex, if it's stock and all of that. So you have something that point out to, the market trend and market activities. If you look at this market, right, I have sold since yesterday, and then it's just the daily dialing, because I saw a rejection at this point and a sweep of liquidity over here. So, but look at it, the market is still supported at a region. Do you understand? Now, this is a typical downtrend. If you go to a daily time frame, you will see that and all of that. So here we have a low and we have a high. So this high, there's no body break. If a body broke it, that would have been another new high, but no new high, and then it only swept it. That means this market continued to go down. So the setup of the market's arrangement by structure and toward a given direction is what we mean by a trend. So it's going up or down or sideways. So, but I would not want to consider sideways in this matter. I want you to see clarity of the swing, the high, the uptrend, and the downtrend, because it's obvious you're going to be working more with those activities in that order. Do you get it? Okay. So now that is so. If you go back, sometimes the trend that you couldn't find on 4 hours, you could see in clarity on 1 hour, but you have to be very careful. So some markets on 1 hour can be very choppy and or create a very confused. Now, so okay, let me quickly take my time to explain something to you here. Here you have a low and a high and a low. You see this high is an internal high, so it's not considered. So you are working with this because some people will not say this is a break of structure. No, this is the break of structure. That's the external. Do you get it now? All right, this is correct. This is correct. This is correct. This is correct. This is an internal. Okay, this is an internal. So that means this is an internal. Okay, see, this is the external high and low. So this one, no. So this is the next high, and then this is the low. Can you see that? This is high, right? This is internal, this is low, this is high. So you can understand the dimension of movement, as it were. So you can see that even gold is struggling within a range and all of that. So when the market is struggling in a range, you don't still have a problem. What do you have? You have tools that spot it out for you, and you still be able to take trade as much as possible. Does that make sense? I'm sure it does make sense. All right. So that's one side of it. So talk about the trend, and then that's it. Then the last point is called swing point. We call it swing low and a swing high, which I've actually pinpointed, but just to tell you the dimension of it. Swing high and swing low. So we say higher, okay, swing low, and swing high after structural breaks. PBS buy point and sell point help in revealing these regions as areas of taking trades, either for short term or a long term. So let's quickly go back there. Let's go to let's go to this and then go to 4 hour time frame. So let's enable our swing point, which is the sniper call. So look at the sniper call. So now, because this was the major external, the massive sell it give you here was massive. So you were not bothered. Okay, can you see that? You were not bothered. Now, but now the market has said buy here. You can see that this buy was a long buy. Until it take out this, you may not bother. Can you see that? The market, and again, because the trend again has showed up that we are still going up. So why are you need to bother? You don't need to bother because the strength is still up. Are you following now? So, but the moment it crosses this as a major resistance, you are seeing the market to start showing a very massive downtrend. But even upon that, it still shows that this is a break of structure because this one become internal to this external, but it's a trend. Are you seeing that? It's an internal to this external. If not, externally, this is a high, and this is a low, and this is a high, and this is a low. So this is what is recognized externally. Can you see that? This is what is recognized externally. So please pay attention. It's very important. This is what is recognized externally. So, but internally, we have a different structure set up already. So that means you will have been trading this. So a low, a high, a low, a high, a low, a high, a low, then you will have been trading it. So if you go to 1 hour time frame, you may see it more in clarity. Okay? So you can see now. So you have this is a low, this is a high, this is a low, this is an internal. Okay? This is an internal, this is an internal, right? This is an internal. So that means this is a low, this is a high, right? This is a low, this is a high, and then this is a low, this is a high, higher than this. So this is a low. So all of these are internal. So the market continue. and then break above this. This is internal, it's not taking. So that means this high to this high. So if I take Fibonacci retracement, so pay attention, learning is very, very important. It's a continuous thing. So even try, it came back. Can you see what now happened? It aligns. This is a powerful signal. Oh, yes. This is a what? A powerful signal. Let me quickly explain to you why is this a powerful signal. Number one, we have a swing low and we have a swing high. We have a swing low and we have a swing high. So with this swing low and to this swing high, you expect a pullback into an area of interest, right? An area of interest or area of focus. And then what's your area of interest and area of focus? Your area of interest and area of focus in this context is at least the PDRAs, which is the 50 equilibrium and 60 50 to 60, 50 equilibrium, 50 to 60 golden region, right? And then 60 to, that's 61 to 79, right? 61 to 79 as OTE. So if that is the case, now what happened again? We have a fair value gap here. We have a fair value gap, number one. No, number two, we have the market are marking to the discount. Make a lot of sense. Number three, the place is a support zone. Oh my God. In this type of a trade, you don't waste any time. As you just land there, and then even before your scanner have given you, as your scanner give you, you don't bother. You jump in. Now, if you jump in here, put your stop loss below here. Now, it didn't waste time and it has given profit. Now, if you are waiting for moving average, that's a waste of time. So it's not a yardstick. So, but it's giving you because he is still pointing up. Then you have this internal structure. You return back here again. You don't need to panic. If you are smart, you will even have traded this back again. But if you don't, you only wait. It came to retest this demand zone or support, as it were. And what happened? After the massive move. So this massive move created something. That means we broke a structure here. So that means this is a high. That structure was broken. And then this is from this low. It didn't come down. It only arranged upon all these points. And then we have a massive move up. A break of structure, a low, then a new one. Can you see that? So if you take your Fibonacci retracement from here to the high, can you see that? It came extreme region and all of that. Do you get it? Okay. I'm just trying to elaborate things on how this thing is helpful. So if you can sit down, pay attention, learn as much as possible, you'll be fine. So now let's look at this now. This is a high, right? This is what? A high, and this is a low. So if it's that, so let's do something quickly. So that if you take my Fibonacci retracement from here to this high here, what do you have? It came to the discount level. So that means this market should be buying. And what did your scanner give you? It gave you buy. Though there is a resistance ahead, it looks so disturbing. But nevertheless, your scanner had given you, if you are in here, you'll have been in money before this resistance. And then over time, once you're able to break this resistance, your take profit can be here, or when the market break the stop, the take profit, the region, then you are taking them out, you are adding more positions eventually. So this is how this scanner, and of course, you can see that's why I would say better than your mentor. Now let's go and take note. PBX Sniper Course is a strong tool that helps obedient traders who are simple in heart to follow routine on a daily basis. The simple rule is allow a candle to close in the direction of the signals and above or below this candle that prints the signal. Okay, let me explain this big English. Let me explain. If you are the type that just take trade on 4 hours, what the big English says is this. This market was crashing down. Is that correct? Yes, it was crashing down. If it was crashing down, when it crashed to this point and say you should buy, this is 1 hour time frame. You say you should buy. If you are buying without waiting, where is your entry? As it say buy, they say you should wait for a next candle to that buy candle to be printed in the direction of the signal. What is the signal? It's a buy. Buy is to go up. So that means you have waited for this candle to close. One, and then a new candle open and close. And perhaps bullish, that is this candle, and above this one. And that means your entry will be here and your stop loss will be below the signal, or to give a buffer, you're going to go, that's going to be 71. That's going to be 71 pips. So 1:2 risk reward. So will be somewhere here. Now, this is where you now get it fantastic. Say, how do I take this trade? Now, this one has given you a signal that what to do immediately, it give you a signal, because when the candle complete, yeah, so at a point when the market was crossing like this one closed, the signal had come out. Perhaps it's measuring that probably you have hit into another block, or you have hit into an area of focus, and then you begin to print the signal. So when you print the signal, so you wait. And then you want the candle, that's what I call it, three candle pattern. You want the candle, which is accumulation, manipulation, and distribution. Remember, I would say this candle was programmed around um, price action, liquidity concept, and smart money. Now, so if this happens, so look at this candle. The next one that hold the signal is this candle. You say allow the candle to close. But when it comes and then I want to take the trade, what do you say? You say go to lower time frame. So what I don't need is just to check and mark here. I mark it to see. You may not necessarily mark, but I just mark it to show you. So that means I go to 5 minutes. I've said if the signal that I ask you to sell or buy is on 1 hour, just step down to 5 minutes so that you can find what we call sniper entry, an early entry into that signal. Now, if you look at it, this was not a strong signal, to be very candid, because this candle supposed to close and next one close bullish above it. I was not going to take this trade then, but not until I have is uh, a bullish kind of movement before I can buy. But me, ordinarily, following the rule of this scanner, I was not going to take this trade, because the rule says this is what's supposed to happen. When he give you that, you need to have something like this. Oh, wow, this is a very perfect one. Huh? Yeah, somehow. Now, a much perfect one is like this. Look at this one. Accumulation, manipulation. So this candle could close. So that means if you're a meticulous follower, following simple instruction, all of this movement you didn't enter. Now you are going to enter here. Look at it. Let's look at it. This is your entry. Then your stop loss, nevertheless, where you enter from, is still going to be below this swing low. That's about 19 to 20 pips. It's not a bad deal. Then your take profit. So 1:2 risk reward is your first target before you talk about other region. So 1:2 risk reward. So somewhere there, right? Now you ask me, why is this signal now good? It's good because number one, it gives you here and it's at the support level. Make a lot of sense, right? Now, once you have taken the trade, remember where were you coming from? You are coming from 1 hour. Return back to that 1 hour. So as we return back to that 1 hour, what now happened? Very simple. What happened is, can you see something? So then you are saying, hey, this is where I'm taking profit. So maybe profit one. Then the other one, you want to return to where the market, this is like a minor resistance. Then you're targeting the high of this, and that is where your trade management begin. Now you have taken one profit or about to take that profit. Now the market is still below here 50. So, but nevertheless, so as you take your trade, you are targeting to take one, take profit, and then the other one to trail the market and continue to move up. So that is how you actually identify, an A plus setup that's going to give you more profit and holding for a longer time than just jumping into any market because it printed that and all of that. Okay. So now let's quickly go back. So what do we say here? What to do? What to do? Okay. What to do to be profitable? What to do to be consistently profitable? Number one, have a timetable for trading and scalping separately. My suggestion, check your market in the morning hours, like 1 a.m. to 3 a.m. or 3 a.m. to 5 a.m., depending on how your time frame is. Work with your scanner. Do your top-down analysis with your scanner. Daily for candle, daily bias, 4 hours and 1 hour for structure, and lower time frame for sniper entries. Read my document on time frame sequence for a clearer understanding. So now, if you want to do that, that means you come to the chart, you open the daily candle, and then say, do not trade every day, except if your setup shows up. If you need to scalp, do your scalping with instrument with, okay, instrument with instrument, okay, on instrument, on instrument with good volumes and tighter spread, such as XAU USD, that's good, Euro USD, GBP USD, and all of this. Always set your stop loss and take profit based on risk reward measurement. That thing I use. Have a good and constant allocated amount in every entry based on your position sizing. Master the power of DCA and multiple position within your allocated fund per trade. All right. Your trade management is highly crucial. That must be taken very seriously. That is breaking even, trailing stop loss, partial take profit, and many others. So look at it. Very simple. What I just explained it to you right now. Okay. So now, assuming you take an entry, right? Let's look at this. So you have put a stop loss. Okay. We said you must target 1:2 risk reward first before anything further. You must target 1:2 risk reward first before anything further. When the trade now continue to move up, you break even. That is, maybe your TP1 is taken, you now take your stop loss into your entry point. And this is risk reward measurement. So if you go to your trading views available there, if you don't use all of these things, you can accurately measure your progress or how you are doing your trade. If not, you will just be gambling. Okay? You will just be gambling. Very, very important. So the quality of your signal is totally dependent on the setup you have and all of that. So you can see if I go on daily time frame, okay. Okay, if I go on daily time frame, you can see that this market is still bearish. This is Euro USD. Oh yes, let me just take a sniper pause. So yeah, you can see the structure purely. What is this? High. What is this? Low. Okay. What is this? High. That is higher than this. Good. Then market came. What happened? Market has broken this low. So that is on a higher time frame, that is daily time frame, this market structure shift. So this market have potential to either travel up to this point, all right? And then let's look at it. Take Fibonacci from this high to this low. So that means the market suppose, if you're going to travel anyway, back up to this point. So that is this region. Even if you just come to reject, tip to this rejection, okay? That's what your PDR is. So it can be here, can take up to this point or anywhere, whatever. But now it's already showing loss of strength. Okay? It's already showing what? Loss of strength. So if you continue to get rejected here, then that means it's just a little pullback and then continue to sell down. But look at it, this is already a support zone. Now, if you break all of this, that means it's going to sell very, very well. Do you understand? So look at the next support point. That is how you trade, and then you will be in charge without stress. Is that followed? Thank you very much. So please pay attention to all of this I am teaching because I have to take my time to explain how you best utilize your scanner. And your scanner by itself is teaching you market structure, is teaching you support and resistance, is teaching you a whole lot of things, swing point, and the like. Okay? All right. So this is very simple. Like I've said, this is very, very simple. So let's enable our sniper call. Sniper call take trade accurately, no missing, right? It's you that will miss, but it doesn't. So look at it. I sold this yesterday, right? A buy opportunity already have stopped up. Look at it here. So when you ask me to buy here, that should be yesterday. So let's look at what happened. So you go to 5 minute time frame, remember? But the best signal is a signal that come out in 1 hour. Okay? So what happened? The market, or when it asks you to buy, you can't buy this. You wait for it now. Look what happened. This is a very massive and amazing. It has created a low, a move up here, right? And then created a new low higher than this. Can you see this now? Make a lot of sense. You are not using this, waiting to take trade by this. So you are taking trade by structure. And that remember I told you that this scanner was programmed around market structure, price actions. And when we talk about price action, you talk about candlestick, market structure, trend, all right, patterns, and all the like. So here you have this. What happened? So this is a perfect entry. Oh, yes. Let me show you. This is a perfect entry. And I always warn people, if you are trading one instrument, face it and trade and make a lot of money on it. So your stop loss is going to be below this, not just below this swing point. Yes, you can be lucky sometimes, put it there to be nice, fine. Now, 1 ratio, 2 risk rewards, your first target. So let's push it up. So that's your first target. Oh, yes, that's your first target. So let's return back to where do you come from? According to my friend. So that means this one, your stop loss is there. The market even came down to that. It's none of your business. If you have time, you could take more trade on it. If you don't, so you already have this. So then you are now moving extension. So ordinarily you expect the market to return back to this high. All right. So if it does that, then you're actually going to where? You're going to 1:7 to 1:8 risk reward. Is that followed? Is that copied? So that is it, ladies and gentlemen. Please pay attention. It's very, very important. I have to just take my time to explain more detail of this. This scanner is powerful. So you don't struggle with it, except you are not paying attention to simple instruction. I know what it takes me to do a sit down and be able to draft all of this so that people can have understanding. Now look at Bitcoin. So look at Bitcoin. Massive, massive, massive. Look at Bitcoin. For 1 hour, let's look at it on 4 hours. Okay, if you see, okay, 4 hours. I told you 4 hour signal is the most powerful signal. Look at it. When when it did that, so look at the candle that gave it. So what do I do? So when you get a good signal, now, why is the signal good? Look at it. It's at a key level. Now, it sweep this liquidity. I think I was telling somebody the other day, I said, this one, there's a liquidity here, so that this market is not over yet. So it swept this liquidity and bounce on this extreme order block that was mitigated. So this was mitigated. This become a support level. So now, if we go back to 15 minutes, let's look at it. Good. On that 15 minutes, what happened? Okay, so here is a signal. Now, this candle didn't work, though it closed, though it swept this, but it didn't close above this. So this is the one that closed above. Your trade here, your stop loss below here, and then you're allowed to trade to run. Now you can see that the market continue up move. Now, in this 15 minutes, can you see that it was creating what? A higher high and a higher low, a higher high, a higher low, a higher high, a higher low. Now this is equal high. So that means a higher high, okay, and a higher low. Then a higher high now is formed. Then a higher low has not been formed. You know why? Until this break this, a higher high, a higher low has not been formed. Are you following now? This is very, very simple. I'm sure you can see this is a high. Once you take out this, you have a low here and all of that. So, ladies and gentlemen, congratulations. If you have been following and learning and paying attention to all the instruction, this should be a very strong training for you that you should take very seriously. Thank you very much. Have a nice and blessed day. Apply them daily. Work on this thing daily, and then you perfect your strategy. Thank you very much.